Hi, today we're going to talk about Chapter 24, which is called Differential Analysis and Product Pricing. And so just so you understand, differential analysis is an analysis of two different scenarios, deciding which is going to be the best outcome based upon a series of steps. So a differential analysis is literally making a managerial decision based upon two separate courses of action and realizing the best outcome is the decision you need to make. So here are the 5 steps. Identify what we're going to make the decision about. Step 2 is to look at the different alternatives. Step 3 is to gather information and do a differential analysis. It's literally like putting a pros and cons list down on a sheet of paper, except you're using numbers. Then we're going to make a decision. And finally, we're going to go back and make sure that our decision actually created the correct results that we wanted. So I'm going to give you an example on the next few slides. So I am a restaurant and I like to replace currently I have tables for customers to sit at, but I want to pull up some tables and replace it with a salad bar. So I'm going to use those 5 steps to show you how I'm going to make the decision. So here's number 1 is I want to increase my income, and I think I can do that by taking out my tables and putting in my salad bar. So here are my 2 things. Existing space is using it for tables, or replace it. So whenever you're talking about whatever is already there, it's called status quo. So the status quo is using my floor space for existing tables. Otherwise, I'd like to replace it with a salad bar. So here's the data I'm gathering, and this is going to become what we call a differential analysis chart. In this case, this is my alternative 1, which is leave the tables there. And so I'm going to look at my revenues, cost, and my income. So an alternative 1 is usually the status quo. So here I have revenues. If I leave my tables, I'm already getting $100,000 in revenue. But if I decide to put a salad bar in, then I'm looking at a revenue of $120,000. Cost. So my cost for the existing tables is $60,000. But notice, if I choose to change that, I'm going to have increased cost. But overall, I want to look at my differential income. I'm already making $40,000 from that space. But if I choose alternative 2, I'm going to have a net income of $55,000. So the differential analysis would actually be to decide between these 2 things. So let's talk about the differential analysis of revenues, cost, and income, because we break it down that way. It's called incremental analysis, where I actually analyze each section of the chart. So this is my revenue. The differential revenue is the amount of the increase or decrease from what I'm already doing to what I want to do. The differential cost is the same thing. It's what cost I'm going to incur from what I'm already doing to what I will be doing. And then the differential income. Will it increase or decrease? And so a differential analysis chart actually looks just like this. This is called a differential analysis chart. Alternative 1 is the status quo, usually, depending on the scenario we're looking at. Alternative 2 is what I'd like to do. And what I'm going to decide is what is the differential effect on income if I choose alternative 2. So this is tricky. It's always laid out like this. And this should always say differential effect on income if I choose alternative 2. So the first thing we're going to do is we're going to look at revenues, and we're going to go across this way. So this is $100,000, what I'm already doing, 120. So I'm actually going to be increasing my revenues by 20,000. Remember, it's the difference between these numbers. It's going to increase. Now my cost, and remember, costs are things I pay. So my current cost is 60,000, and my new cost will be 65. So the difference is 5,000, but it will be an increased cost, which will be a negative number. And finally, I don't go across this way as much as I come down. 20,000 minus the 5,000 is a net $15,000 in my income. So the differential effect on my income, if I choose alternative 2, will be increased by $15,000, which basically says here. So based upon that, the decision you should make is that you should actually do it. Okay? So, and again, going back and making sure that my revenue and costs were correct. That's the last step. I wouldn't say it's not the important step, but after the fact, after your decision is made, it is the step to take. So what we're going to do is we have 6 different scenarios that we're going to look at a differential analysis. And they're going to be listed in this order: lease or sell equipment. So this is equipment I currently own. Do I want to lease it to someone or do I want to sell it to someone? Discontinuing an unprofitable segment. So it's basically discontinuing a product line that's not profitable anymore. Manufacture or purchase. Make or buy. That's what we're going to look here. Replacing fixed assets. Should I replace them or continue using them? Sell a product or processing further. So as I'm making a product, I will create byproducts. Should I stop and sell it as a byproduct or should I keep processing? And then finally, accepting additional business at a special price. So in the following videos, we're going to look at these 6 scenarios to decide the differential analysis on the net income.